Good evening. This is Doc Severson for the TheoTrade report for Tuesday, September 5th. I'm going to start out tonight's report on the S&P futures. Now, what I've been talking about the last week or so here requires me to zoom in on the daily chart. Okay, so what we talked about was we saw a small little descending downtrend, right? And after Tuesday, what happened is a higher low got printed as well as a higher high, so we transitioned into an uptrend. And I said, great, because what this means is that this could mean the beginning of a weekly downtrend. So it's not necessarily obvious to think about this, but most downtrends require a lower high to start off with. So if we have a daily downtrend, this has to propagate into a weekly downtrend by first going higher. All right, so higher sets up that lower high, and then you can get it released to the downside. You almost have to do this. It's almost like the forward press in golf. It's just getting something started on that direction so you can get some momentum in that direction, right? Because you've got to get too many people on the wrong side of the tape with too large a position and then pull the rug for them to get the violent price action that you need to generate that move to the downside. And this is why today's tape was so important, because, again, on the upside rally, here comes what so far, now the trend hasn't changed. It's still an uptrend, but this is definitely at least a higher low right now. And what we need to watch for at this point is this is where we box in the price action. And if we say, all right, if the price is able to rise above here and go above 2480 on here, then we have continuation of the uptrend. Otherwise, if the price just continues lower from here, drops out of the box, chances are very strong that we now have, as well as that higher high, we have a lower high setting up in the weekly chart. So higher high, lower high setting up. And this is where we're going to get our really strong moves and maybe go back down to the mean of the 200-day moving average down here. Now, what the market's obviously trying to price in right now is it worth staying in, or is there just too much risk on the table to be able to survive in these political waters? Or do fund managers want to take one more rotation through here before we get into the final fourth quarter? This is obviously why we see a lot of volatility that comes along in the month of September, is because of all these risks. Although the newfound risk of having Kim Jong lob a missile at some country is obviously very, very new, is not something we've had to deal with. And frankly, the market's taken this in stride extremely well, almost too well. Makes you wonder what the market's going to do when it actually truly does get some risk it has to process in there. Okay, so right now I want to transfer over to the spiders. So instead of just looking at the futures, I also want to look at the spiders here, because what I do every weekend is set up the expected move for that week. So today we hit that downside target on the weekly expected move. The price has already come down and tagged that expected move. So what I want to do, you can see it here in the blue line here, the lower blue line. So every weekend what I do is I set up two alerts, one to the upside, one to the downside. That alert got hit today. Price went through that expected move like it was made out of butter, but you'll notice that it clawed its way back to close just above that expected move target. So that is a valid trade setup. Tomorrow I can, as long as the price holds, I can set up a call spread to the upside to see if we can take advantage of that. Now, the caveat here is I really don't want to be holding stuff overnight. But what I could do in tomorrow's market, if I wanted to, is go down to the, let's see, we could do this a couple of different ways. Actually, we could use the 6th September, and we could set up a simple call option here. So what we typically can do is, if there's only one day left to go, with today's low volatility, it's still fairly low, we can just set up a directional call option. Or what we can also do, if we were comfortable holding it for a couple of days, which I'm really not in today's environment, we could just set up an at the money. So we could do something like a 245.5, 246.5, and we could set up a vertical spread there. Let's see how much skew that we have to deal with in today's market. So that's actually a lot. There is a lot of skew. There's a lot of volatility skew. And what that means is that all these out-of-the-money puts are just being priced for a fortune right now. And it's kind of thrown off So we would normally see on a $1 wide spread at the money, we'd see at about 50 cents midpoint. Nowhere close to this right now. So I'm more of in the mindset of seeing if we can get a good early entry on this 6 September option tomorrow, call option, and just take it long and see if we can ride this thing for a couple of points tomorrow for a few percent. So again, the point here is that the trigger of the lower expected move has been tested today and well defended. And as long as the price stays above that, tomorrow we do have a long signal, which is a valid signal for us. That is it for today's report. Thanks for listening, folks. We'll see you tomorrow.